Hello! For the past year I've been using an amazing piece of software that has changed the way I think about trading systems and has speeded up the process of developing new strategies. In this video I'm going to share some of the best kept secrets of successful systematic traders and demonstrate that it's possible to beat the stock market if you have the right tools. I'll start by introducing RealTest, the software I'm using for backtesting. Then we'll look at why you'd want to do this kind of backtesting. And finally, I'll walk you through a demo where I build a simple system which would have significantly beaten the market over the past 15 years. If you've ever lost money in the markets trying to follow other people's advice, you're probably looking for a way to verify whether a trading system really works before you risk money on it. RealTest is powerful backtesting software that enables you to research and test systems that really work in the market. RealTest was created by Marston Parker, a veteran trader recently featured in Jack Schwager's bestseller book Unknown Market Wizards. What makes it special is that it can do multi-strategy, portfolio-level backtesting, something I'll explain in a few moments, and it's the tool which Marston himself has used to generate years of market-beating returns. It's relatively easy to test a strategy on a single stock or futures contract. Rules can be established for when to buy and when to sell, and many charting packages include the ability to backtest bar by bar, keeping track of profits and losses as you simulate trading. Here you can see me doing that with Apple. But this hits problems once you try to test a system in this way across thousands of stocks one by one. I can tell you from experience that it soon becomes very tedious, particularly if you decide to make changes to your strategy halfway through, which means starting over, retesting everything one stock at a time, bar by bar, all over again. That's where portfolio backtesting software like RealTest comes in. You can define entry and exit rules and have the software simulate placing trades on all the stocks and futures you want to trade, then summarize the results. This literally saves hours. Every time you want to make a change to your trading system, the full test across all stocks can be performed in seconds, and you can easily compare results for the changes you make. What's more, defining precise rules eliminates many of the biases and errors that plague us when we do manual backtesting. But there is a problem with running a strategy across a portfolio of stocks. Markets change all the time. A strategy that performs well for a few months when markets are trending up may do badly when markets move sideways. Shorting stocks can enable you to make huge profits in periods of market stress, but can continually lose money during quieter periods. What we really want is a way to limit periods of drawdown when the strategy loses money. You might think that there's no such thing as a free lunch. Every trading strategy goes through bad periods, doesn't it? However, there is a way to improve results, and it's probably the best kept secret in trading, an approach most people can't access because it's too difficult to test and complex to trade using existing software. The Holy Grail of trading is not just to diversify by trading lots of different stocks, but also to diversify strategies. In other words, trade multiple strategies at the same time and you can get a magic combination. Better returns with less drawdown. The rough periods of one strategy's performance are smoothed out by the good periods of another, as long as the strategies are as uncorrelated as possible. Now, to test this kind of system of systems, you really need powerful software, and it's that which makes RealTest special. Let's walk through an example using stocks on a daily time frame to see how it works. There are three things we need to thoroughly test a strategy. Number one, excellent data. Number two, well-defined trading rules. And three, testing software with good analytics. For data, we'll use Norgate data for reasons I'll cover in another video. RealTest makes it simple to access this data. We just specify the source of the data, the dates we want to import, any indexes we want to include, such as the S&P 500, and then click Import. Within a few seconds, we have the entire history of all the stocks we're interested in loaded. Over 1,200 stocks in this case, because that includes the many companies which have now delisted or which are no longer in the S&P 500. Because RealTest stores this data in memory, it's incredibly fast at backtesting, as we'll see next. Now, let's define our trading strategy. First, we need to construct our signals. Imagine we had a spreadsheet with the open, high, low, and close and volume data for every stock. We could add a column that calculates the 200-period exponential moving average by typing this formula and then filling it down. We then need to repeat that for every one of the 1,200 stocks we want to test. Now let's do the same in RealTest. It's much simpler. Just define a name for the EMA period and then use the built-in formula for EMA. We'll call this variable slow EMA. And we can do the same for a quicker EMA and we'll call that one fast EMA. Now the trading rules can be defined. We first give the strategy a name, in this case EMA crossover, and then define when to enter and when to exit. We need to add some further details so that RealTest knows how many shares to buy. In this case, let's buy up to 10 stocks at a time using 1/10 of our trading capital each time. We'll include commission of 0.5 cents per share or $1 minimum to take into account real trading costs. Now we can test the strategy by clicking the Test button. Down the bottom in the status bar, we can see RealTest performing the calculations. Over 10 million calculations in 25 seconds. I'm running this on an old laptop here, not a supercomputer. RealTest is just incredibly fast because it holds all the data in memory. At the click of a button, it calculated our EMAs for every stock for 15 years. Then starting on the first day, it examined every stock, worked out which could be purchased, simulated the trades, worked out how much trading capital we had and how many positions we could have open, checked for any exits, moved to the next bar and repeated the whole process for every stock again. It's very important to realise that RealTest works on all stocks for each day bar before moving on. That means it knows how many positions it has open and how much trading capital it has available. Many software packages can't do this portfolio level testing because they simply test each stock in isolation without keeping track of what the rest of the system is doing on each day, leading to inaccurate results. So what happened to all those trades? They're summarised in a single line in the results window. Now, an average buy and hold strategy will often return under 10% per year with up to 50% drawdown in bear markets. Can we beat that? Let's look through the vital statistics. Here's the total number of trades the strategy made. The ROR is the annual rate of return, and that's ultimately what we're after. Next is drawdown. It's no good getting a great annual return if the drawdown is high. Some years you could lose half your trading capital or even scrap your trading system, so we want to minimise this. Other stats help us compare one system with another, such as the Sharpe ratio, which in this case of this simple system is 0.85. Incidentally, RealTest is very flexible and you can define your own statistics easily, which it then calculates for every test you run. If we double click the results line, we can instantly see what that was like over the 15-year period. Here's the equity curve. Note that each day we're always starting with the same account size, so we're not compounding. In reality, of course, you'd get much better gains with reinvesting profits, but when backtesting, it's easier to see if a trading system performs well by not compounding when testing. And here's drawdown. See how the system performed reasonably, except in the 2008 credit crunch and the 2020 COVID-19 crisis, when it suffered around 40% drawdowns. Trading this system during those years would have been very difficult. So where are all those trades? Well, right-clicking the results enables us to view every trade, whether it was a winner or loser, and even drill down to see the trade itself by double-clicking the line. RealTest isn't designed to be a charting package, but it still does a great job of showing the detail, which is invaluable when working on new strategies. Using arrow keys makes it simple to scan through the different trade charts to really learn what the strategy is doing, or to view what happens after a trade. How can we improve this? Well, adding a second strategy to counterbalance the losses is the obvious next step. Watch how easy that is. We simply define a new strategy name, in this case mean reversion short, and set up the rules. We'll enter short if these conditions are met and exit if we get 4% profit, or after a week, whichever comes first. We're also going to prioritise trades with the highest 5-period RSI, in other words, the most overextended stocks each day. Once the strategy has been set up, we click Test, and the results are returned in seconds. Our first strategy is the green line. Our second is in red. we can immediately see that the combined equity curve, shown here as solid grey, seems better and the drawdown has decreased during periods of extreme market sell-offs. Want to try a variation on this strategy? What would happen if we change the RSI length? That can very quickly be tested by simply changing the parameters. But do we have the best parameters for our strategy? Checking that is done through a process called optimization. Let's change the strategy parameters to ones we'd like to test. In this case, I'm choosing values from 3 to 8 for the short RSI length and 100 to 300 for the slow EMA. Clicking the Optimize button, we can easily select which parameters we'd like to vary. This is going to run 30 total tests, which we can start now. Now at this point, the speed of RealTest really shines through, though I'm going to skip ahead to when all the tests are complete. We can sort results by any column, so it's quick to see which combinations perform the best. We can also right-click and view the optimization results as charts for a visual comparison. A note of warning here. We have to be careful with optimization because it picks the best values from the past, which will rarely match the future, something referred to as overfitting. So what we're looking for is the values which are most stable, where there's broad support for values in that range being successful, not necessarily the one with the highest returns and lowest drawdown. So in this case, I would probably choose a 200 period EMA length and an RSI length of 4. Once our system has been developed, we can produce a list of trades to place with our broker at the click of a button. Just add this line to the script. Then each morning, we import the day's data from Norgate and run a test to see instructions appear for the next trading day. The whole process of running this strategy can take just a few minutes a day. Of course, these are very simple strategies and we'd be unlikely to risk money on them, but they do serve as a good example of how powerful this backtesting software can be.